For years, millions of Iraqi dinar holders have waited for this moment, and now it appears to be finally happening. Major U.S. banks, including Wells Fargo, Chase, and Bank of America, are reportedly beginning to accept and process Iraqi dinar notes, including the widely discussed 25,000 denomination. This isn't speculation or a minor internal test. It's a confirmed policy change that reflects a notable shift in how major financial institutions handle one of the world's most debated currencies. So, what does this mean for everyday investors holding dinar? Could this be the beginning of the change so many have anticipated? In today's report, we'll separate fact from rumor, outline what's happening inside the banks, explain what steps you should take, and explore how this could reshape the dinar landscape heading into 2025. For more than a decade, the Iraqi dinar market has been marked by hope, speculation, and at times frustration. Many investors acquired dinar in the early 2000s, convinced that Iraq's economy would one day stabilize, its currency would strengthen, and those holdings would rise dramatically in value. Over time, however, U.S. banks grew cautious, refusing to exchange high-denomination notes such as the 25,000 IQD bills. Their hesitation stemmed from legitimate concerns about authenticity, limited international demand, and Iraq's unpredictable monetary policies. As a result, the dinar was often viewed more as a collector's novelty than an active currency. But now, that perception appears to be changing as new reports confirm that major banks are once again accepting dinar. The story is evolving rapidly and could redefine how both U.S. and global markets view Iraq's financial potential. So, what exactly has changed? According to verified internal communications and customer reports, Wells Fargo has begun accepting 5,000 dinar notes across several U.S. states. These are not isolated events or small pilot programs. They represent a broader, coordinated update in banking policy. Chase Bank has also followed, reportedly updating its foreign exchange list to include larger dinar denominations. Meanwhile, Bank of America has begun processing dinar transactions for qualified customers under specific criteria. In short, people who were once told, "We don't handle dinar," are now hearing, "Yes, we can process that." This kind of operational shift suggests careful planning, regulatory clearance, and growing confidence in Iraq's financial direction. The rollout began in recent months, signaling a potentially pivotal development for dinar holders nationwide. Let's take a closer look at how these exchanges are unfolding. At Wells Fargo, trained staff and designated branches are now prepared to verify and process dinar notes, using detailed security checks such as watermark verification, color shift ink, and serial number tracking to ensure authenticity. Chase Bank is taking a selective approach, focusing primarily on regions with larger Middle Eastern communities. Its process often includes appointment scheduling to ensure accurate documentation and compliance. Bank of America is proceeding cautiously, offering exchange services mainly to long-term account holders with established profiles. These policies vary from branch to branch, but the overall trend is unmistakable. Acceptance is expanding. What was once thought impossible is now becoming operational reality. However, it's important to clarify, bank acceptance does not mean revaluation. The ability to exchange a currency at the current market rate is very different from that currency being revalued. Still, the shift in banking behavior represents a clear vote of confidence. When major financial institutions begin treating a currency as legitimate rather than speculative, it indicates renewed trust in that nation's stability. That's exactly what we're seeing with Iraq. The Central Bank of Iraq has worked to modernize its systems, strengthen oversight, and improve access to international financial networks. These U.S. banking developments suggest those efforts are gaining traction, positioning the dinar for greater global integration. What's driving this sudden shift? Several key factors stand out. Iraq's economic reform efforts have gained international recognition. The country has stabilized oil production, paid down foreign debt, and bolstered its foreign reserves. Global institutions are also expressing greater confidence in Iraq's regulatory and anti-money laundering systems, which have been strengthened over recent years. In addition, as global markets seek new growth opportunities, Iraq is increasingly viewed as an emerging economic story. Combined with a more open U.S. policy environment toward legitimate foreign currencies, these forces are creating the conditions for what we're witnessing now, a measured but undeniable move toward normalization of the dinar. For dinar holders, the natural question is, how can I exchange my notes? The first and most crucial step is preparation. Contact your bank before visiting. Do not walk in unannounced. Exchange policies differ widely, and not all branches are yet equipped for this process. You'll need a valid ID, an existing bank account, and in some cases, proof of where your currency was purchased. These are standard compliance requirements tied to anti-money laundering regulations. Once verified, exchanges are processed at the market rate, not any speculative or RV rate. Exchange rates change daily, so timing may affect returns. Smaller transactions are often handled immediately, while larger ones may require additional verification through the bank's foreign exchange division. From a market perspective, this increasing acceptance signals renewed legitimacy for the Iraqi dinar. For years, it existed in a kind of financial limbo, real but marginalized. Now, as U.S. banks begin handling it alongside other world currencies, investor interest is likely to rise. This renewed engagement could enhance liquidity, slowly improving valuation prospects over time. It also strengthens Iraq's connections with Western markets, a goal the government has been working toward. Each bank that adds the dinar to its accepted currency list brings Iraq one step closer to full economic normalization, a process that seems to be accelerating faster than many expected. Real-world examples confirm the trend. In recent weeks, dinar holders in several U.S. states have completed successful exchanges. One customer in Texas exchanged 50,000 dinar at a Wells Fargo branch in about 45 minutes, with funds deposited directly after verification. In Florida, multiple Chase branches processed smaller exchanges without issue. These cases demonstrate that the policy shift is tangible, not theoretical. That said, some customers have still encountered uninformed or untrained staff, underscoring the importance of confirming details before visiting a branch. The rollout is active but gradual, and awareness is still spreading. Zooming out, the broader economic implications are significant. Iraq has spent years rebuilding after decades of instability. With stronger oil exports and expanding trade partnerships, it has been methodically restoring economic credibility. The reintroduction of dinar acceptance by major Western banks may be one of the clearest indicators yet of Iraq's growing financial maturity. This shift could prompt other nations to follow suit, expanding international recognition of the dinar and, over time, improving Iraq's position in global trade and investment circles. It's not just a currency story, it's an economic transformation in motion. Naturally, this development raises renewed discussion about a potential revaluation, or RV. Does the current banking movement mean that a revaluation is imminent? The answer remains not yet. Revaluations are controlled by the Central Bank of Iraq and are driven by broad economic factors, not U.S. bank policies. What we're witnessing now is acceptance, not revaluation. Still, it's a crucial foundational step. Acceptance builds the infrastructure that would be needed for any future adjustment in value. If Iraq continues strengthening its fiscal position, controlling inflation and expanding trade, a stronger dinar could eventually follow, but timing remains uncertain. For dinar holders, the best approach is preparation and patience. If your local bank participates in this new policy, confirm their requirements carefully. Keep your notes in good condition, clean, unfolded, and properly stored. Bring identification and any proof of purchase documentation. For large exchanges, consider dividing the amount across several banks or transactions. Maintain detailed records for tax reporting purposes, since foreign currency exchanges are considered taxable events. Above all, avoid acting on excitement alone. Compare rates, verify authenticity, and make decisions based on confirmed information, not speculation. Taxes deserve special mention. Any profit realized from foreign currency exchange is taxable under U.S. law, potentially as income or capital gains. That's why keeping thorough records, receipts, exchange confirmations, and bank statements is critical. Financial professionals recommend maintaining both digital and paper copies for future reference. Consulting a qualified tax advisor before exchanging large sums can help ensure compliance and avoid unnecessary complications. Being organized now will make the process far smoother later, especially if currency values or regulations shift. Looking toward 2025, Iraq's fiscal policies, oil revenues, and trade developments will be key indicators of where the dinar goes next. The country's growing reserves and improved transparency are helping rebuild confidence globally. If progress continues, even more banks, both in the U.S. and abroad, could follow the lead of Wells Fargo, Chase, and Bank of America.